Okay guys, welcome back to my channel once again, and on today's video we're going to be talking about market structure. We're going to be talking about internal structure, and we're going to be talking about liquidity. Now, knowing these three factors will enable you to make a good amount of profit in the market trading with technical analysis. With that being said, let's jump over to the video immediately. Now, on my previous video I told you to learn how to identify trend. I believe you've watched that video. If you haven't watched it, I'll drop the link in the description box. It's the last video in which I updated. I told you how to identify trend, and you'll be able to identify trend. If we're on an uptrend, we'll have series of higher highs, higher lows, higher highs, higher lows, and higher highs. And this in this section, you'll be looking for a buy market. Now, I told you that you can catch a buy and a sell in. If a market is buying, you could still catch a sell, because let's assume this is a 4-hour time frame. On this 4-hour time frame, these markets would be more sluggish because this is the overall view of it. Let's assume this is a 4-hour time frame. This will be the overall view of it. If we go down to a 5-minute time frame, this retracement in which we see here, this retracement in which we see, in which I draw over here, will be a complete downtrending market, and we could still catch effective short at this point. Like, we could still sell the market here, come to this point, buy the market, sell the market, buy and sell the market over and over again, and we'll keep making profit. So let me just show you how to draw this out. Now let's assume this is a 4-hour time frame, and we want to trade on the 5-minute time frame so that we'll be able to catch quick profits, quick sales. Now we'll come over to the 5-minute time frame when we are on a retracement. Now let's use this basic. Let's use this place. We have a higher highs, a higher lows. We have a higher highs, we have another higher lows. Now we expect that this will be another higher highs, right? As you can see over here, this will be another higher highs that will create another higher low for us. So when we come here and we are fully verified that we have a higher highs, then we can catch a short sell. How can we catch a short sell at this point? Let me just mark this out. Let's assume the market have spot up to this place and it want to start retracing. Now that retracement in the 4 hours will start giving us a clear sign in the 5 minutes. So this is what we are going to likely to see on the retracement of the 5 minutes. Let me just draw it out. Let me get this out. Now if we head over to the 5 minutes and want to catch that retracement, this is what scenario we are likely going to see. We're going to see the market start changing structure in the 5 minutes. So the market is going on an uptrend on the 44 hours, and it wants to retrace. If we are seeing scenario of retracement in the market, we'll see something like this happening in the 5 minutes. We'll start forming series of lower lows and lower highs. When we start seeing that the market is forming series of lower lows and lower highs, now this is telling us that okay, the market is beginning to retrace. So on this one, this will be a 4-hour bullish market on the 4 hours, and we'll be wanting to catch a retracement. Now if we go over to the 5 minutes to catch this retracement at this point, we start seeing a sell market. Now how can you jump into this sell market? There are two things you have to consider first. Now you want to consider that this market, the overall trend is on an uptrend. And once the overall trend is on an uptrend, the highest that this will drop will be 50%. So you don't want to trade way down more than 50% on a retracement. From this zone, you can just use your FIB tool to calculate from this zone to this zone, and you don't want to trade more than way less than. So you'll be targeting this section as your take profit if you're trading retracement. And before you enter into the market, you will also consider liquidity, because the market will always need liquidity to move. Now, what is liquidity? This liquidity are zones in which people are looking for buying opportunities and selling opportunities. Now, if you look at this time frame, if you look at this chart on the 5-minute time frame, which will be this retracement on these 4 hours, we'll have this. Markets have started creating lower low series of lower lows and lower highs, lower lows and lower highs. Now, where is the liquidity? The liquidity is at this point over here. Let me use a box to mark it out. The liquidity is at this box over here. We have liquidity lying down here. We have liquidity lying down at this place. This lower low, lower high. This low that created this lower low again, we have liquidity lying down there. Now, after we created this new low over here and we came back to create another lower high, do you know what? Once we create a lower low again, we now have a set of liquidity lying over at this point again. Now, all this liquidity are where people are setting their stop loss and where some people are assuming to buy the market. So now most traders, most retail traders, I'm also a retail trader, but we'll just see this from other perspective of liquidity grabs. Most traders now are looking forward to, after this push creating this lower low, most traders are looking for the market to push to this section and sell, and they set their stop loss just above this place. They set their stop loss just above this place. Now, the market needs your money. The market does not want you to make money. The market does not want me and you, the high institution does not want me and you to make money. So what they will do is that they want to drag price to get your money. They want to drag price to get you out of the trade. So mostly what scenario that will likely happen is that they will take you out of this market while you sell to them and they buy cheap. They take you out and you sell to them, they buy cheap before they move the market to the initial direction in which it's supposed to go. So this is what you also be in all trade. The markets move with liquidity. So instead of you waiting to buy at this point and or at this point on 5 minutes, you mark out all of those zones as your liquidity point. Especially if you're on the 5 minute, you mark out all of those zones as your liquidity point, and that will be what you want to avoid buying into. So instead of entering there, just take your buy from this side. Let me just mark it out. We'll still go to the real charts to carry out example. You take your buy from this side when the market has dragged out all of the liquidities and is ready to move to the initial direction. Let's be using a short trade here. Now, this is where you want to set your trade. This is where you want to enter into the market. This is where you want to enter into the market after all of the liquidity has been taken out, because the scenario that likely going to happen in the market is that this will happen from this zone in which you have, after the market has gathered enough liquidity, we'll just see the market do something like this, do something like this, do something like this, drag out those liquidities, all of them, and it starts selling again to take your profit. So I hope you're understanding this. So that is just it. So this would be the retracement. That retracement you see at this point here, after you just display take out liquidity, is something you will be able to trade here on the 5 minutes. So the market is still buying, but you could come down to the 5 minutes and trade, and you consider all of the liquidity section that the market has created before going into the market. Now the same is this. It literally works on all time frame. You can use any time frame to trade it. So it works on all time frames. So let me just take this out and let's see much example of a downtrend market. If a market is downtrending overall, so that we'll go into the chart now and carry out real life example. So let's look at a downtrending market. Let me take all of this out. Oops. So guys, if you are catching some value from this video, do ensure to like, subscribe to the channel. This is just a new channel trying to grow it up, and I'm going to be giving you guys value back to back. So let's talk about a downtrending market now. When the market is overall downtrending, you can also still take advantage of it to catch some long trades and some short trade, and also put liquidity into consideration. On my next video, I'll talk more on liquidity, but on this video, I just want to give you a taste of how it is to just catch some quickly good sale that will give you advantage to lose less and win more. So let's say we have a 4-hour downtrending market at this point. Let's say we have a 4-hour downtrending market, and you know when a market is downtrending, create series of higher highs and higher lows, lower lows and lower high, just this way for downtrending market. But this is just an example, textbook example. Just as I told you, the market will not give you this look at all times. So when the market is downtrending, we see something like this. In lower lows, form series of trend again, get to a section, close below, giving you another lower highs, lower low, I mean, creating series of lower lows and lower highs for us. Now that we already know how the market move, all we have to do is just, as usual, mark out all our zones, mark out our zones, okay. Then we'll say we have a lower low, we have a lower high, we have a lower low, we have a lower high, we have a lower low. We'll just mark everything out basically so that we'll know where we are trading on the overall trend. Now, if this were to be a trade I want to take, after I mark it out, lower low, lower high, lower low, lower high, now I know that the market has created another lower low. And what am I expecting in this market? A lower high. Now, after a lower low, I will now be expecting that, okay, once the markets create another lower low, lower high, I mean, then we're expecting another lower low. So what in this kind of scenario, what I would likely do is that once I just know that, okay, we've created this, created a higher highs, lower low, I mean, high, lower low, lower high, and lower low. I'll be expecting that, okay, this market would bounce back because this would be a big drop in the market. You see series of candlesticks just drop down. I'll know that, okay, now what we are likely going to do in this market is that we'll create a higher, lower high, I mean. Now, for me to take any trade here, because I could still catch some good profit at this lower high. The market is selling, but I could still catch some good profit here. For me to take any trade here, I want to first make sure the market creates a good amount of structure, and I'll consider liquidity before taking the market. So let's just say this. I'm going to go over to this. Okay, let's just say the market started creating these over here, moving out, creating that lower high for us. Boom. So at this point, I'm going to show you how to catch this trade on this lower high. Now let's go. This will be a 4 hour. Let's assume this is a 4 hour. You just head over to 5 minutes. Once you see that a lower low, lower high has started creating, you head over to 5 minutes. Now, just as I tell you, you know you need to first draw out all of those zones on your 4 hours so that you know exactly what you're doing. Now on the 5 minutes, this section over here, let me draw it out. This section over here will start being a uptrending market. You see a clear uptrending market at this side. This is how to enter it. You go to the 5 minute again and you mark out zones. Now the zone should be clear on the 5 minute as well, but I'm still going to show you how to jump into them. Sorry, I'm just having problems clearing these things out most times. So on the 5 minute, we'll see something like this. We'll start seeing this will be a 4 hour retracement, but on the 5 minute, we'll see the market doing this, creating a higher highs now, higher low, higher high, higher low, higher high, higher low, higher high. The market will just play around basically, but this is how for you to now catch that section of that trade in which you want to catch. What do you want to look out for? You still want to look out for liquidity before catching the big move on that retracement. Now, this is how it works. Once you come to the 5 minute and you see that okay, the market is now creating this series of higher highs and higher lows, you just as usual, you take your pin out, you mark it out. Now, this would be structure. The first thing you want to do is draw out structure. Once you draw out structure, then you look for the liquidity zones. You draw out structure, we have structure like this. Then what you say, okay, higher highs, higher lows, higher highs, higher lows, higher highs. Okay, you have another higher highs. Just mark out all of the structures first. I told you how to mark out structures already, so use the same method in marking out all of the structures. Once you mark out all of the structures, you read it again: higher highs, higher lows, higher highs, higher lows, higher highs, higher low, higher highs. Okay, we now have the higher highs. That is the last high to be here. You mark it out again. Now, once you've marked it out, you see that we had a very big push move to this side before it take off again. Now, this is where you need to get the picture. Now, once you've marked out all of the structure, let's assume price is still at this side. Once you mark out all of the structure, for you to catch this move that will give you a big profit again, you come and map out all of those zones I tell you are liquidity. Now, where is the liquidity here? This your higher low is one liquidity. People have set their stop loss at all of this side. People who are entering the trade have set the stop loss at all of this section. Where is another liquidity point is this section over here. So we have liquidity, we have money. And before a big move will happen in the market will come and take out all of this liquidity, all of these stop losses at all this section. The market will come and take it out. You draw out all of the liquidity section in which we have here. Now, once you see draw out all of this liquidity section this way, then this is what you want to do now. Okay, the market will definitely come down to take out basically one, two of those liquidity. Then the third liquidity will drag everything out down to the downside. So what you want to do is that you look at this liquidity and you know that okay, price will still come and take out this liquidity. You mark it out. Say price will take out this liquidity over here. Price will take out this liquidity over here. And sometimes this liquidity might have been taken out, but I'm still going to talk more on it. And you just look at this zone over here and just say you're expecting the price to come and take out this liquidity before you go into the market. Just mark it out. So let me use this too. Now this is the last liquidity you're seeing here, and your entry point will be when the market take out that liquidity. So where's the long two over here? Long two. So all you do now at this point, you just set your entry at this place where most people already set their stop loss, and your take profit will be at the top liquidity. Because market will always drag all of the liquidities. Once it's come down to drag this liquidity, it will go up and also drag out the top side liquidity before you see another bounce again downside. You take out all of this liquidity. Now there's also liquidity here. You take it out, come down to take out the downside liquidity, go up again to take out the overall upside liquidity. Then we'll see another dump, and that dump will probably be the dump that will create the overall dump on the high time frame as well. You can just see that after that drop down, you see that the market will give you another drop down again, still working with the same structure, but this is just how to catch trade on all sections. So let's just make this quickly. Let me just go into the real chart and let's just see some examples though. Ooh. So let's go into the real chart now. So this is a pair of Sol USDT, as we can see over here. Now, if I come into this market, the first thing I want to do is I'll go to my 4-hour time frame. Let's assume, let me take this out. Let me take this out and analyze the market down to the teeth for you. Okay, I'll go to my 4-hour time frame. Let me delete this. Now, here we are at my 4-hour time frame. Now, on my 4-hour time frame, what will I just basically look at? I'll just consider, okay, where is this market currently going to? Is the market buying or selling? So if you take a look now, you see that the overall market, let me give you a more clearer picture. You see that the overall market is selling. The overall market is selling. So let's just go and work with what the market is currently doing. And how you can pinpoint trade at different time zones. Okay. Why is this thing wasting my time to come forward? So here we are now at the 4-hour time frame. And as you can see, we had a push at this side. From this side, we saw the market buying, creating series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. And this push to the upside had the market come down. Now, this after this big push, we're expecting a retracement. This is where the initial structure broke from. After this big push, now we're expecting a downtrend because the overall market is selling. Now, it will take very long for you to say you want to come and catch trade here. So what you basically do is that you just look at the liquidity. If you want to buy long at the time or you want to sell short, you look at where are the liquidity line, because after the liquidity grab, that is when the market will move. So we have this here, it went up, come down. Now, where is the liquidity in this market? We had liquidity here. Now there are liquidity lying here, there's liquidity lying here. Let's assume you just catch this market after this big move and the market is retracement. Where can you start looking for even buying long? You are looking at all of these liquidity points. Now these are all liquidities. These are all liquidity lying down, and the market will definitely go and take everything before it gives you that big move. But at some point, you don't want to wait and wait and wait when you can just catch money, making money by all the small moves as well. So once you just know where the market is going to, okay, we have liquidity here. You can come look for an entry at this point, a long entry at this point, because you know that okay, this liquidity will be taken out, then the market will bounce. This liquidity will be taken out, the market will bounce. So you can just catch little shots from all of this place. So I'll mark out this zone where after a liquidity is being taken out, I'll mark out this zone here. Now say okay. Once the market comes down to take out this liquidity, we'll see a little bounce, and that bounce will be a retracement. You can also catch money in that retracement. So that's what I just want to clearly explain over here. Now, after this liquidity is being taken out, you see the market bounce. Now you see if, let me zoom this out a bit. Now you saw a bounce of the market at this place. And you should know that a little bit of a retracement will be created here. Now, how can you catch this little retracement here? This uptrend here, because this is a 4-hour time frame, but here in an if we go to a shorter time frame, we'll see that this place would be buying. This place will be buying. So let's go to 5 minutes and see what the structure is giving us there. So now on the 5 minutes on same trend, let me just zoom it out. So now if we look this same pair on the 5 minutes, if we come here, look at this same pair on the 5 minutes, we will notice that there's a little bit of buying pressure here after this push. You can see after this push now took out liquidity and we start sawing the market is started buying. Now after this one retracement, we have another, mark out your zones as well. Now after the push, after the liquidity is being grabbed, we had this one upper higher highs, higher lows. We have another series of higher highs, higher lows, higher highs. Now the market have started creating series of higher highs and higher lows. What will you be expecting to do? Now this zone in which we have here is a liquidity. This zone is one liquidity, and the market will come down to take it out. This zone here is another liquidity. The market will come down to take it out. So you want to buy at that end zone where the market is taking out liquidity. Let's draw it out again. Let's draw that zone out. So this is where the market will overall take out all of its liquidity. And before we see another move, we want this market to take out liquidity first. Now, this was the highest point the market have gotten to before you take out that liquidity in which we have here. You just draw it out. Let me make it more bigger so you understand. So this is the low, this is after all the structure created, this is the low end liquidity and this is the high end liquidity before that market drop to take out all of those liquidity at downside. Let me just draw it out. If this video is a little bit confusing, you can just watch it over and over again so you just get the structure head behind all of it. So as you can see now, we have this here. This is another liquidity point that the market will definitely come and take out. Now, the overall market is on a downtrend, but we can also catch this long. Now, what you do is just raise your long to. At the end of this liquidity, you've already positioned your buy. Now, just know that the market should just come and take out the liquidity with just a little pip, and that will be a week. We just drag out the liquidity and move. Your top side liquidity now is here. And before the market move down again, before the market create a serious sell again, after I take out this down sell liquidity, we definitely come up here to take out the upside liquidity before it moves down. So let's see, has it taken it out yet? Let me draw this a little bit. I'm not sure it has taken it out. Once you take out that upside liquidity now, you can start looking for sell to flow along with the overall 4 hour time frame, because we started this calculation from the 4 hour. Now you can see that it took out the liquidity, it starts creating structure again. On this little structure it's creating again, at some point it come back, drag out liquidity, and will start going. So the market always move with liquidity. Once you see any liquidity, you could just use that liquidity as an entry zone point. So for us to be looking at ending this liquidity now and flowing with the 4 hour time frame, which is on a downtrend, we want this market to come up here, take out all of this liquidity. All of this section also are liquidity gathered here, and the market will not move with force down until it has come up to take out all of this liquidity. Then once you take out all of this liquidity here, you will start looking for a sign of a short trade. Start looking for structure, creating lower lows and lower high, and you can jump into those trade on the liquidity sell again and catch a long run. So this video is getting long. I never wanted it to be this long. I hope you understand. If you're still getting confused about how I explain all of this, just like drop a comment. And if you understand, also give this video a thumbs up, and see you on the next video where we'll be going more in depth into liquidity, internal structure as well, before we talk about risk management and how to control your philosophy, trading philosophy, and so on. So see you on the next video, guys.